Hello traders, welcome to the Flow Show, Thursday 22nd of January, and quite a fun day yesterday with his nibs, the orange one, with his big massive speech over in Davos, which produced some surprises, some decent market moves, which we will obviously talk about shortly. Hope you're all doing all right though, and getting through this uptick in volatility that we've had. Morning, Kay. How's it going?
Morning, mate. Yep, all well. And as I was saying in the room, happy St. Vincent to all the wine lovers. It's a winemaker's St. Patron, so it's an important day of the year today as well.
Yeah, should be a national holiday.
It should be. Yeah, it should be.
Yeah, should be. Everyone should be forced to go out and drink wine, non-alcoholic wine for those that don't partake.
I will tonight. I will.
Yeah, I'm sure. Well, no different to every other night then. They make it out like something special. Right, let's go. Reuters poll has shown that long bets on the Chinese yuan are at the highest since April 2010. We're still seeing dollar yuan holding its downside move, so yuan strength continuing, though the PBOC have started their fixes, holding their fixes above the 7 handle. That's obviously in CNH, so that might be an indication that enough is enough for maybe in the short term, but we'll have to wait and see. They've been bringing those fixes down and down and down and down. As you can see there, technically we're just bouncing off the 61.8 of the move from 2023. I'm ignoring that spike there because it was tariff related stuff. So yeah, Kay, they haven't been too verbal on the currency of late, but usually indication can come from those fixes.
Yeah, we had a bit of comment from a newspaper which is supposed to be one of the mouthpieces for the PBOC, saying or asking the market not to go too far, that they're keeping an eye on things. This is actually the second time. I think the first time was I don't recall exactly the day, but it must. I think it was around the end of year or so, where there was again one of the newspapers coming out with it. But we know that officials usually don't comment too openly about the currency itself, unless when we were up in those 730s, they came out a little bit more verbally. But yeah, it looks like the market, because we were trading around the lows then when that media outlet came out with the comments, we're trading a little bit higher. Does look like they are going to want to keep it from dropping too far, this dollar yuan. So they want to keep it in ranges, which is usually what they really want, right? A very stable currency, which is also a bit of a economic game. If you want investors to come to your country, you better have a stable currency, not one that moves up and down 5 or 10% in the space of a few sessions. So no, they're always keeping an eye on it, as you say.
Yeah, the comments, I've just looked back, the comments were a bit mixed. We had one China paper talking to an economist, saying that they expect the yuan to strengthen for the rest of 2025 on, what do they call it? Let me remind myself, on capital inflows. So that may be true. Not really anything from officials. There was even an economist, another economist. This was 3rd of December. A big investment bank saying that the time has come for authorities to allow for more appreciation of the yuan, which is obviously what we saw into the end of the year. But yeah, maybe a little hint. I might keep an eye down here. Might have a little nibble if it keeps holding around this 695 level. Are you still short?
No, Ryan. I miserably missed the last percent actually. Yeah, no, I'm not sure, but you know what? I don't disagree with you. It's like with everything. I would love to see those speculators taking them on the PBOC and then go to a level like just below there. I have some stuff in the mid 80s. The wider move, 2022, 2025. If you stick some retracements on it, we're about halfway is in the 686, 685s. That's where I would get interested, mate. That's
Are you
where I
taking
feel.
that spike in, or
Sorry?
are you taking that spike into account, or you?
Yeah, I have the spike because it's done 2 days in a row. On my picture at least. We had a
Yes,
spike up and then we started from there.
so about that 50 then.
Over there,
680.
yeah, that would be a nice level, and it's also, if you look back a little bit, it's also a level that's shown up not too far from there. Call it
Yeah,
685, 687. It goes down there. I think that would be getting very interesting to try the other side.
yeah, absolutely. I think so. And yeah, as I say, I mean, obviously I've got this fairly decent level 691, which we tend to find decent support and resistance against
Mm.
going back. So that's another one if we do break this 61.8. But also you've got to look back at that 7 level. It's already resistance into it. It's a big figure, one of the big figures, and you always get a bit of action around there. So got a bit of a range at the moment. This
Yeah, but
95 sevens.
that's why I'm a little reluctant to go in now because I have the well, and maybe not me alone, but I have the impression they want to keep it around 7.
Yeah,
And that's it. Their level is 7, and you can fool around 2-3% above and below. If it goes more, as we've seen in the 730s, they're sending the submarines out to intervene in dollar yuan, and I think the lower we go, the less they will be liking it too. Just I think they have like that 7 in mind, and that's it. You can fool around for a few percent above and below, but that's it.
yeah. Okay. Well, I think I'm going to keep a closer eye on those fixes moving forward. See what they want to do with that. But anyway, moving across the water. Oh, I need to get me screen all the way back up now. I'm not sure if this is a bit of a surprise or not, Kate. Japan have reversed their forecast for the fiscal year 2026 primary balance surplus to a deficit. Now, I assume this was all set before Takaichi took over and dropped, obviously a fiscal plans in, which is, one of the reasons why they might have flipped it back to a deficit. It hasn't really hit the yen much, that news.
No,
Whereas it might, in other times, if you flip forecast from a
yeah.
surplus to a deficit and a quite significant
Mm.
surplus too, it would have got the market roiled. But I think it's par for the course, this one, isn't it?
Yes, but I'm still surprised that we're not trading above 159 in dollar yen, for instance. It's yeah, but okay, it was to be expected because we know everything that she wants to put in place, and as I've been saying already a good few times, even sponsoring part of the wage hikes by some instances. So maybe just that the market knows it and was expected. We have Bank of Japan tomorrow. Maybe it's just a fact of not wanting to push the boat even more ahead of the Bank of Japan. Has to be said that you look at those yen crosses. It's we are still, the yen is still so weak. I know the index didn't show it, but that's yesterday's number. If you look at I guess the number they will produce today, if everything stays where it is going to be a bit nasty one lower again. Euro yen fresh highs, sterling yen 213. I mean that's just continuing to push as well.
Yeah.
It's just going, mate.
Yeah. Although this yen index is obviously delayed because it's for
Yeah, it's
yesterday's
delayed.
moves. It was largely unchanged, coming in at 73.72 from 73.79 the day before. But yeah, you know that's going to be changing if these yen moves are holding today. Right, over in Aussie land, and we had the jobs data, which brought a bit of, I wouldn't call it surprise because it's been running pretty well off and on, employment, but a bumper one, the employment change up 65.2 thousand, was expected 28.3 thousand, so a decent move there. The unemployment rate as well was expected to go up to 4.4%. Instead, it went down to 4.1%. The revolving door looked good with the bulk of those jobs going in full time, turning around a negative number the month before. Whether there's some seasonal factors in here again, it's always a funny time of year with the holidays, particularly part-time and that sort of thing going on. But part-time still gained by 10,000 over a prior 35,000. The participation rate ticked down. It came in a point down over what was expected, unchanged on last month at 66.7. So that makes that unemployment rate look even better. The main consideration here is what it means for the RBA, and we are pricing a 60% chance of a hike in February. I think February the 4th is their next meeting. So it looks like the market's siding with a hike. Okay, I'm still of the mindset that maybe the market is too expectant for a hike. I mean, obviously, we know Bullock and Co are a bit bullish, but does this warrant a hike after just trying to get rates down?
Not immediately. I see here on our page that we're expecting 14.5 BPs. The real hike is only fully priced in for, well, it depends if it's like 0.25% or less. The real hike is really priced in between March and May. But I'm still of the opinion that the market is overpricing two hikes in 2026. I mean, that's really going to require a really hot running market. We know that Bullock is hawkish, but is she hawkish enough to go straight away on a hike? I doubt it. It's quite. It will be quite rapid. I mean, let's not forget that the prior report was a negative one in Australia, at least the employment change, right? So, and again, if it's a bit, if there's seasonals in there, yeah, the overall picture is still looking good. If you look, barring a few exceptions of a negative print, the overall picture is still good. I'm going to let the market. I'm personally not in the hike camp for immediately. Maybe the meeting after, but I'm still in doubt for two hikes this year. I mean, apart from the Bank of Japan, which central bank would really want to hike and push yields higher? No, yeah, I want to see it happen still before maybe one, because they are quite bullish, and inflation was a bit sticky. Although wasn't inflation ticking down a little bit on the last numbers?
Yeah, it wasn't. I think it was a case it didn't go down as much as people might have.
Yeah, okay.
It might.
But, oh yeah, and she called it a what is it, a defeat or something? Or
yeah, she said it was within their forecasts or something like that, or
yeah,
within their forecasts. But I think that 60%,
sure it warrants a hike straight away, and
yeah, that's my thinking too. And I'm thinking that 60% is a little bit hot. So
yeah,
what that means, as we know, as I always like to say, know what the market is thinking going in. It's a little bit hawkish going into that meeting. And if that doesn't change, then the market's at risk of spitting its dummy out if it doesn't get a hike at that meeting.
That doesn't take away from the fact that I think Aussie is still one of the better currencies out there. It's I'm a bit long both Aussie dollar and Aussie Kiwi, and I still like it. Well, in parts because of Bullock doesn't want to let the bond go fast. But then also, when you look back at the tariffs, Australia is only 10%. US is looking at Australia, so it's a very small deal. But that a US company has put I don't know, 300-400 million bucks into an Aussie mining or company for minerals or so, or rare earths. It still attracts money, in my opinion, and I think there's still good fundamentals behind the being long Aussie.
Yeah, no, absolutely, and I think that's potentially the trade. If the Aussie dollar is still bullish going into that meeting and they don't hike, you're probably going to see a significant dip. That will likely get bought up if Bullock keeps a hawkish stance. So, yeah, for once we might get a decent central bank move to take advantage of.
And I don't want to go into an endless discussion about that, but there's pricing and pricing. If the market, everybody talks about their 60% chance. I mean, yes, but that's just a result of the market probably not necessarily thinking that they would hike, but keeping yields high enough because there is good activity, there is a good labor report, there's no reason for yields to come down. If you get sticky inflation, there's no reason for yields to come down. That doesn't necessarily mean that the RBA is going to hike next week or in 2 weeks.
Yeah, and I think we still get a CPI report ahead of that anyway, which is the one Bullock wants to see. Which will probably could be the kicker for whether they hike or not, but we'll get to that point when it arrives. Right, on to another central bank, the old Vikings. They left rates unchanged at 4%. Continued their line that the rate will be cut further in the course of the year, but they're not in a hurry to do so. Anything a note else from them guys? The old Morges?
Require still a restrictive stance, so that's everything undovish. I think they're firmly on hold. They must be relatively happy with the evolution of the Norwegian krone, because they were a little bit unhappy about that in the prior reports, where they put a line like they were surprised about the NOK weakness. I haven't read the whole report, but I haven't heard them mentioning it, so I suppose they're relatively happy with where things are at right now.
Yep. We had some borrowing data, financial data out from the UK. I don't know why it's showing a minus number there, because it's not a minus number. It's a plus number. I don't know what this calendar's doing. Anyway, that number came in around what it was last month, so no big deal there. There was a bit of a pickup in financial requirements, cash requirements, as you can see there from that public sector one, up at 16.9 billion. So that's money needed to pay off lending to the fine public sector and central government and whatnot. So that was up a bit. Bit of politics news for those that don't know. So here in the UK, we're in the midst of ongoing political turmoil, shall we say. Everyone's pretty pissed off with the current government. They don't trust the one before it. Nigel Farage's party, the Reform Party, has been gathering a bit of popularity. He came out speaking about Bank of England's Bailey, saying he's perfectly nice, but a Brexiteer would be better. He's assuming that they're going to win the next election by saying we're going to pick different people with different attitudes, and a comment we can all agree with. When was the last time the OBR got something right? Now, this is something that's going to play out over the months ahead. We haven't got an election for over 3 years, so probably not too much to worry about now, but it could present a decent trading opportunity. As it stands, I think the Reform Party is likely to gain more popularity in things like council elections, maybe picking up the odd seat in Parliament. But I still think it's a bit of a protest vote at the moment. They do lead in a lot of the polls by quite some distance, but polls and what happens at a general election is another thing. So if the Reform Party grows and grows and grows, that could influence what happens in the quid getting closer to an election. May might be a point in time where we really get to see any popularity of the parties, because we may get some elections happening there, although there are moves to cancel some of those elections due to devolutions in councils and all sorts of rubbish that I won't go into. But just something to keep at the back of your mind when talking about the UK. Mexico had some retail sales out yesterday. They improved to 1% month on month, 4.4% year on year. Decent numbers there. I'll just show you that quickly. If it's up there, where are we going? Down here, down here, down here. Boom, there it is there. We also had pending home sales a little later, which is a bit of a wobbler. Came in down 9.3%. If I can find it, where it is, there it goes. I haven't looked into why this one happened. Again, December can be a bit of a funny month for house sales. No one sells their house over Christmas, so it might be a bit of seasonals in there. UBS, talking about the Bank of England, or talking about a few things actually. They reckon the BOE will deliver 2 25 pip rate cuts in March and June. They're changing their dates from February and April. And a comment from the CEO, UBS, saying it's almost impossible for a big chunk of the system to bet against the dollar. So it says there is no choice but the dollar. So talking about all this rebalancing out of the dollar. A Swedish pension provider, Electa, announced that it had divested most of its US treasuries to the tune of some 8 billion. The press are scrambling around for these sorts of stories now. Okay, so it's becoming a bit clickbaity. We've had this conversation in the chat room. We've had this conversation on the shows, on the Face Show yesterday, what this all means. There is no imminent implosion of the US financial system or anything like that. People aren't going to be wholesale getting out of the dollar just because of this Greenland stuff. That's not the way it works. Rebalancing, most rebalancing is done purely for financial reasons, i.e. you can earn better yield elsewhere. It's natural. It happens every day, every month, every quarter, every year, every whatever. It's been happening. It happens all the time. Okay, when it becomes something worth noting, don't worry, we'll have it noted for you. But it's still in just a bit of a diversion, shall we say, for the presses to talk about. We did have another one, Danish firm, saying that they were getting out of some US assets, but as they mentioned, that was just a bit of a protest play on what's happening with Trump. JP Morgan's Dimon talking about the credit card rate cap that Trump is suggesting. Obviously, a big provider of credit cards, earning off that interest. He says it will be an economic disaster if a cap is put in, and it will remove credit from 80% of Americans. Every time Trump mentions this, bank stocks take a little bit of a wobble. I just had a quick look before the show started. The average credit card interest rate is around 22-23%. Trump has touted a number of 10%. As we know from Trump, as we found out yesterday, he always pushes for what he wants, and then he settles where he really wants it. This credit card thing, it could be a big thing if it comes to pass, but he's going to have conversations. He wants 10%. The average is 22%. What's the chances they settle on a cap around 15, 18%?
16, 16 and a half. Yeah, I mean, Diamond is right in a way. Obviously, I mean, a lower cap on credit is good for the consumer. The problem is, and we know what's going to happen, is that the banks are going to put much tighter rules on who is going to get credit, and that may end up being having an adverse effect, and therefore less people able to borrow. So yeah, I think they may settle somewhere. It might also just go away, like some of the stuff is what Trump would like to see, and what in fact is going to happen in the end. None of the banks seem overly happy with it. Although I think there was one bank door who said that they would be thinking about this kind of stuff because it's On the other hand, if he succeeds to push a few banks over the edge to lower those credit interest rates, it could also be a bit of a commercial thing for some of the banks, right? To get some more stuff on the books. So yeah, I don't know how it's going to pan out really, and when, this is something. There's a lot of stuff being thrown out, and which then just gets silent and just goes away.
Yeah, yeah. Well, I can probably state with some facts. Well, I say with some conviction. There's no way that banks are going to stop credit lending or allowing people to take credit cards or whatever. It's too big an industry. They'll find a way to take the money back, the interest back on other loans, non-credit card loans and whatnot. Yeah, they're all good moaning because they're going to take, effectively, 40-50% hit to their profit margin on those rates if they sort of halve.
Probably
Which,
lower deposit rate.
yeah, it's no small beans given the size of credit card industry over there. But this is banks; they'll find a way. Right, moving on. US Trade Representative Greer says we don't know if we will get to a comprehensive trade deal with China. So just in throwing a bit of a wobbler in there in all the prior discussions. Right, on to Mr. Trump at Davos. His speech was an absolute belter, depending on your viewpoint. 83 minutes it went on for, and he nailed the bingo card. He talked about everything, most of it to do with how good the US is and how good he's doing, but he covered everything. He covered credit cards, he covered POW, he covered the housing industry, he covered the lot, and it was a big old waffle on. And we had to wait until we got the real key comments. That being that he's not going to use force to take Greenland, and that he's engaging or going to be engaging in negotiations about it. Pretty much straight after he had a chat with NATO's Rutte about it all. And Rutte is one of his pals. I wouldn't be surprised if most of the European countries got onto Rutte and said, "Oh, get onto your mate and have a word, will you?" But anyway, he had a nice chat, to which later Trump noted that we have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. So Trump has done a Trump, exactly what he does. Push, 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 get everyone up in arms, running around with their pants on fire, and then he gets a deal done, probably what he wanted in the first place. He's put a lot of noses out of joint with this. Macron, Starmer, Germany, all the rest of it, which I think is absolutely brilliant because they deserve it. Anyway, the Danish foreign minister says that the day ends better than it started, and it's positive that Trump says he will end this trade war. This is a trade war that hasn't even started, didn't even happen. It was going to happen 1st of February, but it didn't even happen. So I don't know what he's getting on about. Anyway, the market was hanging around. As soon as it got that comment on Greenland, he's not going to use force and it's going to be negotiations, that was the green light for stocks to take off, and the dollar too. And we got a bit of a turnaround in that. Kay, if you remember much of it for the rest of the speech, what did you make of the whole
Well,
shindig?
I mean, okay, first part was he was like just rehearsing his State of the Union speech, and then yeah, the second part was really, and I think, well, okay, first of all, the announcement that he won't use force, that he won't even put tariffs, and then I think we need to take it together with what he spoke about with Rutte, that there is some kind of a framework already in place, which, by the way, NATO can't decide about any of what's happening on local soil, but and then come the real reason why it's all happening, or at least the benefits that the US could reap from it is the minerals, and so all of it came really down to the fact that Yeah, they could find a deal. And you know what? I think there's a lot of people who will have had a sigh of relief that it didn't go any further or harder during his speech and then afterwards. Um, and still, maybe Rutte reminded him of the 1951 agreement, where actually the US, with the agreement and authorization, and can just up their military bases in Greenland, providing that the rest agrees, and I think there they could actually find an agreement because it's still there. That agreement has not been cancelled, and so I think it's possible that they do find an agreement actually in the end, and then we will see what he can dig out of the ground on the side.
Yeah, I mean, this is the reason why I love the geezer. He's completely bonkers, obviously, and some of
Mm,
the stuff he talks about is complete bullshit. Some of the stuff in his speech was absolute bullshit. He caned the Chinese, saying that they don't have anything much to do with wind power over there, and it's not a big thing, even though they are one of the biggest wind power producers in the world,
yeah.
if not the biggest in certain aspects. So he does talk a load of crap, but he he's not from the political establishment, and he likes tipping over the apple cart. Okay, what do you think France, UK, Germany would have done about Greenland for the next 20 years if not for him kicking up a stink about it? And that's what he does. He gets people up and gets people moving and gets things done. So on that front, I think he's played a blinder, but it's exactly the same playbook that he's been running all the way through it. We had it for the tariffs. We had it previously. The fact that people are surprised and the market took a dim view of all this is probably the biggest surprise because it's his playbook. You know, we knew it, we saw it, we said it, and it turned out that way in the end anyway. But yeah, well played, Mr. Trump. You're in my good books for the
I
foreseeable
Instead of
future.
a deal maker, I think he's or at least next to it, he must be a very good risk player. You know the game, right? Risk.
Yeah,
Yeah, I
yeah,
think he must be a very good risk player. He must have played that a lot in his time.
yeah. He's a disruptor. He likes disrupting the
Yeah.
political makeup,
Mm.
and yeah, it's something probably a lot of
It's
countries
as
need.
you it's as you say, yeah. The way he does it, the way he brings it on is a bully.
Yeah,
But the points he makes, especially we all agree upon that. It's the Europe, right? Europe has been too tame for many years, and yeah, I mean, and he's right to point at dangers, in the
yeah,
area. If you look at the northern route, I read an article about that. Obviously, now we need to become experts on everything. Yeah, the ice cap, everything. But yeah, I mean, the northern route or the Arctic route is completely dominated by Russia and China. So he's right to point at the dangers that are looming.
yeah, absolutely. Because it's only a short hop from there across to the US, whichever way you go
Yeah.
on it. So yeah, here's a point. And
Slide
as I
from
say,
one side to the other side of the island and you're in the US.
yeah, exactly. Anyway, enough of that. Well, I say enough of that. According to the Wall Street Journal, him and the US is now actively looking at Cuba with a potential for a regime change over there, doing the same to Venezuela. We'll see how far that goes. Once he's got the bit between his teeth, there's no stopping the orange whirlwind. Anyway, that's that for that. Headlines done. Anything else, Kate?
No. I think we have spoken about everything unless you want to dive into the Board of Peace.
He's just funny you say that. He put out a tweet earlier talking
I
about
know,
the
I see
board of
it.
peace, saying that countries have he's going to be chairman, obviously, and countries have been lining up to join in. Then he said some of them. All I've heard is countries saying no. France said no. Macron said no. Starmer said no. Italy said no, though they might join a bit later. Apparently, Putin's on it, which is probably why it's gone down like a lead balloon. I don't know what's going on there, but no, we won't dive into that anyway. Right, let's have a look at some of these moves. Well, I'm on the Aussie. I'll just have a quick look, and okay, we'll probably have a bit more to say. Big level up here, 68. We've been here before. It's always a bit of a sticky level. We're up testing it, trying to just get above it at the moment. I think it probably needs to crack on from this point. So if you see it holding here, then we could be on for another or continuation of this leg up and move higher. Looking a bit ropey now in Aussie Kiwi. Was looking okay this morning. We got this rally back into the 116s, but it's running out of puff a bit now. And we're back under there, back under 115.90. So this is still a bit of a different kettle of fish to what's happening in Aussie in general. And that's because of what's happened with the Kiwi dollar is looking a bit stronger than it has done over the last few months. So this one, I think, Kay, is probably in for a bit of sideways action, I think, from here.
Yeah. I was up actually for the Aussie numbers and added a bit to the Aussie Kiwi again. I added actually right now over the show as well on this dip. We've got something around this 115.75.80 as well. But I think all in all, it should remain kind of bit. But as you say, it's the Kiwi doing it that has now seemingly got over the hurdle that it was struggling with and accelerates. We also have to know that liquidity wise, there's still quite a big difference between the Aussie dollar and the Kiwi. So a bit like euro dollar and the cable, the one can go a little faster than the other, and the Kiwi pips can come a little faster because of the liquidity as well, and that's holding back this Aussie Kiwi. But if you look at the fundamental side of things, interest rate side of things, I still think that Aussie Kiwi should at some point find its legs again and maybe move up. Well, 118s is a high one, but at least back up into that 116.35.65 zone there. There shouldn't be too much of an ask to get up there.
Yeah, we shall see. This one, it's probably a bit like Euro Sterling moving into a bit of a speed mover. If the Aussie's going faster or the Kiwi's going faster, this one's going to be moving. Moving from the Antipodean Euro Sterling to the real one. Air coming out the tyres a bit on this one. Back below that 87.20 and holding it. Now we're coming back down to this 86.90, 87 area. It really needs to hold on here or we're going back into this mess, which won't be much fun. So if you're trading this one, if you're on the long side of this one, just watch out because if we do, as I say, if we break down here, I'm not saying we're going to go all the way back down to the lows. Might do, but I'd imagine that we're just going to chew around here for another couple of weeks or something like that. So take care with that one.
I didn't like the price action.
Yeah. Oh, what? Sorry, mate.
I didn't like the price action on the Euro Sterling yesterday.
No.
I went out this morning and it's just because of the speed that it's got rejected. Yeah, I know a bit of positivity, and I know the US is not going to bomb the UK or whatever, put tariffs or something, but the speed of the recovery of, or at least the way it came down, yeah, it's both, right? It's the deflation of the euro risk and then the positive vibes in the market. But I don't know. It should hold here, Euro Sterling, but the little blip this morning, I went out just because the price action that we saw over those past 12 hours.
Yeah, and it's again, it's another thing that's being led by a lot of the crosses. It's more euro than the pound again that's driving this, like it was driving it the other way up. So yeah, just keep an eye on that one. Right, last one, dollar mex. Been banging on about this 17.40. We got down to 17.42. The bounce though, not exactly significant. Running into trouble at 17.50s. I'm having trouble getting this bloody trend line showing up on these bloody charts because that 17.50 is pretty much the underside of this trend line, which goes all the way back to, let's put it on this one a bit clearer, all the way back to 2008 through 2013. And we have mooched around it when we've been there before. So that's resistance at the moment. As I say, been pointing out the importance of this level. I'm calling that a first test at 1742. Doesn't mean we're done with it. But if it's going to be a big level, then we're going to see probably a bit of the same action that we saw at 1850, which means maybe some decent rallies off it until it decides what it wants to do. If we do break through it pretty quickly, though, then probably the trapdoor's open and we're going to be heading down to the 17 figure. So here we are. We have to wait and see, watch what happens. Are we going to find it a big level, as I expect, or is it going to do nothing and just wash out? What are your thoughts on this one, mate?
Well, I'm just trading it as I continue to trade it. Yeah, the 1740, obviously. But I'm still short. I've reduced it. But for as long as it stays below the new what is it there, around 65-ish, that little blip that we saw, I'm keeping like 35% or so running, and then we'll see what happens. We'll see what happens. And yeah, I know the line, but if you actually take another one, and I've got actually a double line on my thing, and including that little spike below, it's coming in at around 1710-ish, somewhere around there. I think. But I'm also seeing different levels on there, and everything is happening. There's quite a bit of happening actually on my picture between that 1740, 43 all the way down to 1710-ish, 05. There's quite a bit happening there. So yeah, I think we're in a bit of a zone where we need to pay attention.
Yeah, absolutely. Yeah, I did nibble a little long last night. This is one of those levels you get them now and again. They're just too big not to trade it. And I'm actually putting a TP on my long term shorts at 1741 just in case, and I've run it far enough. But yeah, it's the reason why we're down here is, there's no big news, huge news behind the reason why we're down here. So I'm happy to trade it. But yeah, it's too big a level not to give it a go. And we'll see what happens. We'll see what happens. I may win, I may lose. Right. Over to you, Kate.
Yeah, thank you. I'm just going to try to find what I want to show, and I'm just looking at the clock. I'm not going to show too much today, but we need to keep an eye on what's happening in the metals as usual. And gold, it's just rinse and repeat. What's happening at different levels? Seeing this move lower, and then we start to climb higher again, seeing this move lower, seeing this move lower, and yesterday, what did we have? The positive vibes after Trump's speech and chat with Rutte again provoked a bit of a setback. But I'm just going to play my old record again, and it's holding ahead of the support levels, and that's for as long as that goes on, it's still pretty big. I've borrowed this line here, which is about the parallel line of the underside trend line here. Yeah, we stopped around there. I also highlighted already this 49, 48, 85, 4900 is going to be probably the next one. If you go on a shorter term channel, it may stretch up to maybe 49 and a quarter. But yesterday, and also looking at the equity markets, and then looking at how the reaction was on the risk side, if you take, for example, euro sterling. Oh, euro sterling is actually jumping a little bit right there. I don't know what's happened. It's jumping a little there.
Yeah.
It's jumping 15 pips there. But it's a bit, if you look at as I said, for instance, the euro sterling coming back down on risk, positive risk, euro antipodians, etc., etc. It could have gone lower. It in my opinion, it should have gone a little bit lower, down to 47.20, 47 the figure, but it stopped well before, and we're already back above 48. So that still means that the gold buyers are not letting this one go as of yet. Before we see really deeper retracement, it will have to go through this 4,700, I think. Silver, why not another $5 $5 decline in a few hours? It just, and I know my picture is starting to look a little bit congested here. But if you look at the start of the year, so this 31st of December, start of the year, the 23.6 comes in just right below $90, and we went close there. We had a bit of gap filling also going on, but we're already back above $93. So a bit of a similar picture. Violent swings in silver, much more violent than we can see in gold percentage-wise, but still pretty much the same pattern. We are not starting to really correct deeper. For that to happen, we need to get under 90, we need to get under $86 before we really start to correct much more in the bigger picture. What else, guys? I don't have much else to show. Yeah, the Kiwi, but then perhaps interesting is that it's trying, it's building, it has built a bit on this 58 and a quarter, 58 and a half, and it's trying to trade a bit higher. This could take us into the 59, into the 59s ultimately if it's holding. Okay, I would say 58 and a quarter. Keep your eye on that. If we get another retest or a failure, then the party may be over. But in the meantime, it is still trading positively, which is obviously impacting the Aussie Kiwi as well. And yeah, just oh yeah, we have Bank of Japan. Okay, nothing is expected on the Bank of Japan for tomorrow, but we may have some comments surrounding what they want to do with the further rate path. The thing on the Bank of Japan is that they have now, where they only put the emphasis on the impact of the yen on inflation, they have now said, yeah, but it could also impact growth. So they could say something on the meeting tomorrow, which could have the market have a bit of a reaction in the dollar yen lower. But when we look at the overall picture, and especially all those yen crosses, keep an eye on all those yen crosses, because they are still trading at very, very lofty levels, not giving back much. But it is possible that Ueda says something on the yen versus growth, and that would be a bit of an extra step where that they could give a hint at a weaker yen could actually push them to hike earlier. I do think that where the market was expecting the second half of this year rate hikes because of the trajectory that they had so far, I think it could be bingo right at the start of the new fiscal year. And with that, Ryan, back over to you, mate. Now,
Thank you, mate.
Fred,
That
just
move in
to
the
reply to Fred, do you think the Bank of Japan will step into the bond market? I think it's a big possibility that they do some unscheduled bond buying, but we are seeing now that the bond market is cooling down just slightly.
Yeah. Thank you, mate. Just this move in the quid could be tied up to an MP that got in some hot water, could be deciding on his future, which potentially opens a door for someone called Andy Burnham, who's the mayor of Manchester, who's a potential leadership candidate to take on Starmer. He's also would be very negative for the quid. He's the guy who's been shouting and screaming about how the country's in hop to the bond market. So that would be a negative piece of news if that happened. That's what's being put behind this move anyway. We'll keep an eye on that one as it goes. Right, thank you very much, everyone, for coming to the Flow Show. Have a great day. We'll see you all later, if not tomorrow. And thanks for coming. See you later.